Imagine this, the perfect house pops up, you're touring it, picturing your life there, but then you find out that your offer won't work because of some little money detail that you didn't know about. That's what happens when you're not prepared for home shopping and you just stumble into the process. Before you fall in love with the paint color, the front door, the garden, the floor plans, or a backyard that will host the perfect summer barbecue, spend a moment on the financials. In the next few minutes, I'm going to help you launch your home search from a place of confidence, not confusion. Today, we're covering 3 major things that every buyer needs before starting to house hunt. If you stay to the end, you will get your weekly shot of Colorado real estate agent advice. It's something that I use with every client before we ever step into that first showing. So let's start. Okay, you don't need 20% down to buy a home. That old rule stopped being true years ago. Sure, if you have 20% to put down, go for it. That's great. And you'll avoid paying PMI with your mortgage, so your mortgage payment will be lower. But that doesn't mean that you can't buy now just because you haven't saved that large of an amount. There are FHA loans available that accept as little as 3.5% down, conventional loans available that allow 3% down, and there are even VA loans, if you're eligible, that require 0 money down. There's even USDA loans that offer this 0 down in certain areas. So let me tell you what really matters. What is your monthly payment, and what amount will you be comfortable with after you've saved for all your other costs, such as inspection, closing, and possible repairs? I've had clients who thought they'd be stuck renting forever because they couldn't save that full 20%. And then they've learned about these lower money down options, saw what their real payments would look like, and ended up buying much sooner than they expected. So if you're ready to build equity, and riding on the fence won't help unless you're certain that saving more now will make for a smarter investment down the road. And I would say in this market that's a buyer's market, don't wait. So if you've done your mortgage homework, you will be in good shape. Your lender is going to need more than your social security number and your income to help you effectively. So here's what's really going to matter to the lender. Your complete employment picture. Have you been at your job for less than 2 years? Do you work for yourself? Are there any gaps due to layoffs, switching industries, or freelance work that might affect your loan options? Some lenders really prefer stability, and others are really used to gig economy incomes, and they can work with you. Your actual debts and obligations like car loan, student loan, credit card minimums, they all matter. They all determine your debt to income ratio and how much house you can actually afford and what type of loan you will qualify for. And also your savings, not just your down payment savings, but after buying, what kind of cushion are you going to have? The lender will be looking at that too. How many endorsed loans fall apart because homeowners overextend themselves? Also, your future life plans. This is a big thing when looking at home shopping. Are you thinking about growing your family? Are you relocating for a first job? Buy less home now so you have flexibility later. That can often make the most sense. If your lender knows this, it will shape the products that they recommend to you. And if you have specific financial goals beyond just the house, are you saving for a kid's college, retiring early? Are you starting a business where you're moving? Whether you go with a 15-year or a 30-year mortgage loan can depend a lot on these larger plans, and a good lender is going to ask you those questions and delve into all of that with you. If your lender hears about your debt, savings, and goals, and you're honest with them, that's when things can really happen. They can help you set expectations and get pre-approved for exactly the right loan product that you need, and you won't be surprised halfway through the contract. So now that we're armed with these financing options and personal details, let's talk about which mortgage is right for you. There's a 30-year fixed rate mortgage that's conventional, usually classic, also comes FHA variety, predictable payments. It's great if you plan to stay long-term with a low payment, but yes, you will pay more interest over time. 15-year fixed mortgages, you'll pay less interest overall, but you'll build equity a lot faster, and the monthly payments will be noticeably higher. You may want to run both of those scenarios and compare them. You can get an adjustable rate mortgage with an offer that starts at lower payments and a lower interest rates, but those will change, and you want to make sure you can move or refinance within the first couple of years. FHA, VA, and USDA loans are good for low down payments or 0 down, especially when you qualify for the VA or the USDA loans. Keep in mind that about their mortgage insurance and eligibility rules for those ones. Jumbo loans for homes above the conforming limits, which actually is pretty common in Chaffee County, know that they have stricter credit and income requirements. Here's the most crucial part about your personal goals. If you want to minimize your monthly expenses, the 30-year fixed is like the gold standard product. If you want to pay off your home before retirement, 15-year fixed could be better. Think that you might make a big move in 5 years. An ARM may not be a bad thing for you and give you a lot of breathing room so that you're not paying rent, you're building some equity, but the interest rate isn't killing you. There's no one right answer, but there is a right answer for you, and that's what a good lender plus a good realtor team helps you find. So walking into the market without some clarity on down payment, information to give to your lender, and all of these mortgage options could be like grocery shopping without a list. You're setting yourself up to be stressed out. But when you do know your loan options, your potential payment amounts, and what matters to you, every home you walk through becomes a lot easier to evaluate. There's no guesswork in can we afford this? There's just good decision making. If you made it this far, here is your piece of advice for this week. Before you start browsing homes, even online, schedule a time with a lender and a realtor, or several of them. And you might want to talk to them together at the same time. That coordination will help you understand what the lenders will approve and can do for you, what the real estate market realistically looks like for your financial plan. And having both a lender and a realtor on your team early, that's how you give your buying process a head start. So if you're gearing up to buy, whether you want to dive in now or take some time, I would love to be a guide on that journey. By the time you walk into your first home, you should be ready, not worried. Thanks for watching. I'm Jessica Cheriton in Salida, Colorado. Make sure you tune in every week for more real estate information and advice.